let's speak about NEO, baby. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be catching up on NEO a little bit. Now, one of the main reasons I want to make this video today is because NEO is currently trading at about 8.54, as you can see on the screen in front of us right now. Okay, if I bring us out onto a daily chart, you can see that this is a very, very low price point for NEO. The last time they were down this low was about the end of October, start of November last year, so 4 or 5 months ago at this stage. And that is pretty much the lowest it's been since all the way back in 2020. Okay, now one more reason I want to speak about this particular price point is because if we go all the way back in time to here, which is the 2nd of July 2020, this is the last major gap that has ever been created on this stock chart. Now, we've had this here for ages. All the way back towards the end of October, I made this gap here clear on the chart when NEO was going on an incredible run. That this is when JPM upped their price target. JPM is well known for market manipulation at the best of times, and yeah, we were a little bit cautious of what was to come next, and ultimately that gap ended up getting filled in nearly a year, just over a year and a half later. So then the next thing to look towards was this price point, and it's looking more and more likely that NEO could hit $8.03 in the relatively near future. Now, I myself am a NEO investor. We've covered NEO on the channel since the very early days, back when they were a $2, $3 stock. We invested in them nice and early as well. We've played them on the way up a few times. But what I want to speak about today is the long-term potential. We're going to recap Q4 just a little bit and then speak about the catalyst that NEO investors need to see the stock's price finally begin to go up again. So that's what we're going to be covering in today's video. Really quickly, my friends, could I please ask you to hit the early thumbs up on this video? It really helps me out a lot. Drop me a comment down below. Let me know how you feel about NEO right now if you are an investor. If you know you're watching from the sidelines, if you're trying to open a position or what you're doing. And please, if you end up enjoying today's video, subscribe for more content. All that helps me out so much. Also, if you are interested in getting some free shares, click the first link in the pinned comment down below. Sign up to Webull, deposit $100. You literally get free money. You can sell all of those shares straight away. You can get up to 12. And you can just go put that money into NEO, and it's essentially risk-free. Also, if you are interested in getting Seeking Alpha Premium, it's the only paid stock market service I use personally. You can also click that link in the description or pinned comment down below and get half price off of your first year. So again, NEO is all the way down here, 8.54 a share. The RSI is showing oversold pretty much on the 4-hour chart and nearly oversold on the 1-day chart. That is what would lead me to believe there could be another small downward move to that $8.03 a share mark before hopefully a reversal of sorts, an upward move of sorts. Now, people could argue an M was created here. This is the downward leg, and maybe you could get the reversal from here, but I'm not too worried about going that deep into technicals, okay? So let's speak about Q4 quickly, just recap a little bit before we speak about some of the good things that are going on for NEO right now, because there are some of them I definitely want to speak about, and I do still think personally NEO has a lot of longer term potential. But this article here says, don't let Q4 2022 scare you off. So the company's earnings report and guidance for the first quarter of this year left investors uneasy, and that very much so is true, and for good reason. While the company reported a 60.2% year-over-year increase in vehicle sales, which, let's just be completely honest, is fantastic. I don't care what company you are, what stage of the life cycle you're at, that is fantastic. And considering NEO's growth since 2019, 2020, that sort of percentage year-over-year increase is still great. Its vehicle margin was down significantly from 20.9% in the fourth quarter of 21 to 6.8% in its latest quarter. Now, that is a huge drop off, my friends, and that is one of the biggest worries for investors right now. Still, they continue to believe NEO is a growth stock and expect it to recover meaningfully in fiscal year 2023. And I think a lot of other people do as well, as long as, you know, external factors don't come into play too much, as long as the worst of these last 2 years is behind us. We believe NEO retains a unique position within the EV market as the Chinese Tesla. I don't personally like to call them the Chinese Tesla, especially while BYD exists, but anyway, expanding its EV offerings and battery swap stations. This is still something that is so important, their battery swap station technology. That is what makes them different. We see NEO outperforming in the mid to long term and recommend investors buy the pullback. Now, I also do believe to an extent mid to long term is where it's at for NEO. I think short term is still so up in the air. Even, you know, the entirety of 2023, I think, is relatively uncertain as of right now. But, of course, that is to be seen. The EV market is expected to grow at a compound annual growth rate of 23.1% between 2022 and 2030. And we expect NEO to be a primary benefactor of the growth opportunities in the market. And yeah, those companies who aren't quite like in the top 5 to 10 biggest EV players, but are right up there, probably are going to benefit hugely from this growth. We believe NIO is well positioned within the Chinese EV market, which accounted for 59% of global EV sales in 2022. I believe it might have actually grown the least. I could be wrong in comparison to the US and Europe. I'd have to double check that. Don't take that as a fact. We also believe NIO's battery as a service power swapping stations in Europe have yet to reflect returns on earnings, and that is a big one. That is only going to get bigger and better as time goes on, and we expect demand tailwinds from NIO's PSS expansion to take place in late 2023. We believe NIO is well positioned to grow in the mid to long term. Yes, again, that's what they keep saying. We believe the company's disappointing Q4 earnings are due to temporary headwinds, which we expect to fade through 2023. Now, this is a big one, and this is something that we've seen, reiterated with a lot of EV stocks in the second half of 2022. There have been some terrible headwinds for EV stocks in general, and NIO is no different. We believe the depressed margins are due to the challenging market environment NIO operated in over the last quarter, with a still not fully reopened China and Tesla's surprise price cuts, and this is due to discounts customers get at certain prices. While there may be some near-term downside to work through, we expect the stock to outperform in the mid to long run. We expect near-term downside on two fronts, okay? Rising battery costs, pressuring margins, and increasingly competitive EV market. I spoke about this recently in a video. The EV market is far more competitive today than it was in 2020 and 2021. There are so many more big players there. Legacy OEMs have caught up to the majority of these mid-sized EV companies. They are taking over a huge portion of margins. And then rising battery cost is messing around with these margins as well, because for the first time, battery price increased after a long, steady decline. Now, they're up 7% 2022 over 21. I don't think this is going to become a common trend, but again, we're going to have to just wait and see on that one. And then on their last note, NIO delved into what we believe are NIO's two growth catalysts: China's reopening and its diversification of revenue streams abroad into Europe. After the company's latest quarter, we believe NIO's growth drivers might take longer than expected to materialize fully, but we believe NIO needs time, and hence we channel our bullish sentiment to long-term investors. So yeah, China reopening 100% is going to be huge for NIO and BYD and Tesla and Li Auto, XPeng, all of them. Now, in regards to what NIO's done well, I just want to cover a couple of things here. NIO has followed the time and recession tested strategy applied by Tesla in its early days. Develop and launch a high-end luxury vehicle whose sales and brand recognition can boost the necessary operating capital to develop a lower tier and more affordable set of models to follow. And NIO has done a great job here, and I think Lucid is going to do a great job here, and a lot of other EV companies are as well. This has proven to be a successful example. Copying Tesla's next move has sent the stock crashing near all-time lows. But let's be honest, guys, this is more on a macroeconomic scale. It's happened to a lot of EV stocks. A lot of EV companies have lost 80+% of the value, even the good ones. And I mean, even if you want to use Tesla as your comparison point, where are we? Tesla, right here, from their highs of 412, they're still down, what's that, about 60%? And that is the biggest, baddest EV company that is out there. So that is not particularly NIO's fault, you know what I mean? NIO is giving into peer pressure by allowing discounts of up to nearly 15,000 USD, which to put in perspective represents a 22.4% discount from the average selling price of their vehicles. This incentive announcement gave a whole month of joy for bears and short sellers in the stock. Those patient bulls may get the last laugh. Now again, this is kind of a necessary bad for NIO. Just the way things are in China at the moment, these price cuts are essentially inevitable for any EV company who wants to stay competitive. Now, some good news: NIO also doubled its plant and equipment size capacity in 2022, allowing for a 50% capacity utilization rate under current guidance. An 80 to 85% capacity utilization rate is considered normal. So, I mean, yeah, a lot of wiggle room there for NIO. And noting that NIO currently operates at a 50% utilization rate, and that these pricing incentives will impact marketing departments in the following months, it's not unreasonable for investors to expect a 25 to 35% increase in sales on a quarterly basis between Q1 and Q2. Let's see. Analysts seem to agree, as they have placed 115% upside in the stock, and that is true as well. In general, analysts are bullish on NIO at these prices with their 12-month targets. So that is where I stand with NIO right now. Again, I would like to see that $8 mark get hit, maybe go into the 790s or so, and then make an upward move, fill in that gap. Investors never have to look at it ever again, and then maybe, just maybe, they can finally begin to make a real upward move. Anyway, my friends, that's my thoughts on NIO at the moment. If you watched this video until the very end, you, my friend, are a true legend. I really appreciate you being here. Your support means the world to me. If you did enjoy today's video, got some value or insight, please do hit that like button, comment for more, and subscribe so you don't miss any more videos. Also, if you do want those free stocks from Webull, remember, that is the first link in the pinned comment. And if you want Seeking Alpha at half price, that'll be the second one, baby. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you in another video very soon. Peace.